Hello everyone, this is Evan here from the Trade Risk on Friday, July 1st with a weekend market recap video. Now I am still traveling right now, so this video is going to be brief. We're just going to look at the current market environment, and because I want to try and make sure I don't bring down the hotel Wi-Fi here, we're going to go through this pretty quick. So S&P 500 SPY ETF closed up 3.34%, very impressive this week, and this is the weekly time frame we're looking at. First and foremost, just take a look at the size of the range here. Look at the size of this bar. You have to go all the way back to really August of 2015 to see a bullish bar with this size. So very impressive standpoint right there. Now let's go to the daily time frame and take a look at what happened here. We already discussed last Friday what happened on this big outsized move after the Brexit vote. And this is really where we have to go back though and study this move, because this is where everything started. A very emotional day here, 3.64% down move, one of the biggest down moves we've had in a very long time. And this was a close for the first time below this support level. So this 203.50 area had held in there going all the way back to March of this year, and this was the first time we were closing below there. So this move just in itself, given the magnitude of it, capitulated, I would have to imagine, most of the longs that were holding from the day before. I know I was in this camp because I had longs in before this whole roller coaster started, and I was dumping everything on this day here. Now, if you didn't get out here on Friday, then you certainly were getting capitulated on Monday, because we did see a strong follow through, very convincing follow through day to the downside, selling off another 2%, really getting away from this prior support level and breaking below this psychological 200 level in the SPY. Now, the important thing to note is that the action that follows here, this 4-day complete V-shaped rally higher, is the exception, right? This isn't usually standard market behavior. Markets don't typically V-shape out. Now, bottoming processes do happen more suddenly, but typically you at least get another retest of the lows or some type of back and fill hesitation, and not just a complete scramble to highs like we saw unfold this week. So that's really what happened this week, is that we capitulated out enough of long exposure here, probably most tactical short-term and intermediate-term holders, especially the intermediate guys that were shooting against this level here. If your stop losses start to get triggered below here, and this really took down a lot of stocks on Friday and Monday, you're dumping a lot of holdings, you're selling a lot of holdings and moving to the sidelines, perhaps even getting short. But when this starts to unfold here on Tuesday, when we open at the highs of Monday, we trend and close strongly, we see follow through on Wednesday. This action really makes it tough, because if you're short, you're now taking on pain and you have to continue to roll up those shorts or just cover, adding more buying pressure to the market. And if you've capitulated here and you're no longer involved, there aren't just a ton of happy fat longs waiting for the market to go higher. You now have to start to chase this as it starts to get back above this support level and starts to work back higher into this range. And that's really what you saw this week, was a very classic textbook breakdown failure. Now, I know textbook, you'd argue that, well, you have to still break above 210 to call this a failed breakdown. I'm not going to get into the textbook definition, but at a high level, you really just capitulated a lot of traders here. You washed out in V-shaped fashion and you just trended higher, and the chase is effectively on right now. There's probably still some stubborn shorts out there, and maybe they will be right, but for now, the market is surging higher. It's got that relentless look to it and feel to it. And this has been happening on some very strong breadth, right? Market internals has been supporting this. NIMO is very strongly positive. I think the advanced decline line cumulative is at all-time highs right now. So there's a lot to like with this move. It doesn't just seem like it's not just the price action on light volume. It's heavy volume. It's good participation. And you're seeing this take place, which is also very important. If you go back to the weekly time frame, and my chart's not loading right now, so let me pause this video and I will come back as soon as it does. Okay, and we're back here, and this is that wonderful hotel Wi-Fi I was discussing at the beginning of the video. So we're looking at a weekly chart now, and keeping in mind all that daily time frame analysis we just looked at, that very emotional, week that we've had this week. Now let's put it in context in the big picture and look at where this is all taking place, and it's exactly at the all-time highs. This trend line that extends from the all-time highs, and we're basically at right above or right, at, depending on how you draw this sort of subjective trend line, we're right at that breakout level once again. So keep with all this context we just discussed, with this very emotional kind of washout of longs and bringing in the shorts, and now the market's kind of V-shaping higher. That is a great kind of thesis backdrop to a potential breakout to new all-time highs in the SPY ETF. Now, again, it doesn't have to happen. I'm not saying it's guaranteed, or get all aboard, get all in. But I certainly like this week's action. I like the washout, and I like the speed and magnitude at which we are racing back to these highs, which just probably casts a lot more non-believers in this market, being able to continue gains after how quickly we've came up here. Now, I can make a good case on the other side that, look, we just covered a ton of ground. We're overbought, and NIMO's really hot, and I could point to probably a lot of indicators that could be diverging, or at least just saying that we're at extreme levels. So no one's going to really know what happens next week. The point is we have a lot of things coming together, though, in my opinion, that support the bull thesis more than the bear side. Now, if we start to get back below 205, I'll start to adjust my tune and maybe say, well, this isn't the time yet again. But while we hold up here, while these 8 and 20 period starts to curl back over, while we can either digest or continue to float higher, I'm still going to consider this a very bullish week and a very, very bullish unfolding of events, especially given where we closed last Friday. So that's sort of the way I'm looking at it. We've been building long exposure. We've been putting on new positions, and we are starting to, get back, with a good amount of exposure on the long side. Again, I still would like to see us eventually get above 211, 212, start breaking to new all-time highs to really give the all-clear signal. But in the meantime, we've been building up our long exposure sort of in anticipation for just at least a bullish backdrop. Now, again, I still don't mind if we come all the way back down to 206, 207 and fill in or just rest. That's completely healthy action to me. But just keep all of these kind of factors in mind. There's a lot of cross currents, as there usually always is. But this week in particular, very, very emotional and very quick moving. If we go to some of the other majors here, I'm just going to go over the IWM and Qs and call it a video. You can see we're back to maybe this little trend line is going to cause some hesitation here. I don't know. But we successfully held this support right down here. You have a great line in the sand to use, 108.50. Back below there, all bets are off, and then you have to be concerned again. But as long as we're playing around in this range, I think you can be constructive, and you can see the 8 and 20 starting to try and curl back over there as well as we get back to those recent highs. And then the Qs, you just have a nice, again, just like the SPY, you have a good false breakdown here. We're not quite as high up as we are in the SPY. You can see we're just working back to the middle point of this range, and we're just kind of comfortably back in this range. So again, line in the sand, good line in the sand to use across all of the major indices here. So again, if you want to be long, and if you're an intermediate or long-term investor, trader, the SPY 200 level is a beautiful level to work against, just given the washout that we saw this week. If you're a tactical trader, you could probably be using a tighter stop loss like I am, or measuring risk against this 206 area or something along those lines that can sort of dynamically move as this market continues on. But that's sort of the backdrop. That's the bullish sort of unfolding that as I interpret it this week, and I am constructive on this market, while I do realize, though, that a rest is perfectly reasonable and probably warranted. So I hope everyone has a great 4th of July. I'm going to try and get out some more trade ideas, because there's a ton that we're going through that I found on my scans this week. So I'm going to try and get a post or another video out later this week. But I wanted to get something out on the markets as a whole. before then. So again, enjoy the weekend, enjoy the time off. Markets are closed on Monday. Thank you guys for watching. I'll catch you next time.